Hello everyone, this is Gopalakrishnan, founder and CEO of Money Avenues. Through this video, I'm going to talk to you about the latest directive by SEBI on the multi-cap funds in the mutual funds industry. Before getting into the directive of SEBI on multi-cap funds, let me take you through the concept of multi-cap funds in the mutual funds. In mutual funds, there are various categories of funds, and within equity funds, there are again various classifications. Among them is multi-cap funds, which basically invest in stocks which are spread over various market capitalization. So what exactly is a market capitalization? Let's say, for example, there is a company called ABC company which is listed in stock market at a certain price. So the number of stocks of ABC company into the current market price gives the value of current market capitalization. So based on market capitalization, there are three categories of stocks, namely the large cap stocks, the mid cap stocks, and the small cap stocks. So what exactly does the multi-cap funds do? Investors invest in these multi-cap funds depending on the performance. The funds in turn invest in all these three categories of stocks, namely the large, mid, and small cap, depending on the market conditions and the calls taken by the fund managers. The money is deployed. In the current scheme of things, there are two requirements for the multi-cap funds which are defined by SEBI in the past. That's number one, 65% of the money should be in the equities, and number two, the fund can structure a portfolio across various cap stocks without any restrictions, which means there are no restrictions for the fund manager to deploy money into one specific category of stocks, any specific capitalization of stocks, but a combination into the funds. So there was a lot of flexibility in the existing model. So what exactly has SEBI come up with in the new directive? In its new directive few days back, SEBI has redefined the rules of the game for multi-cap funds. So there are two changes fundamentally. Number one, the funds should have at least 75% in the equities, and number two, funds are capped at least at about 25% in each of the categories. So which means SEBI wants the funds to maintain at least 25% in each of the market capitalization stocks. So in 25% in large cap stocks, 25 in mid cap stocks, and 25 in small cap stocks. That has to be maintained at all levels, and the remaining 25% can be used across various market capitalization depending on the fund manager's call. So what are the implications of this change? There are implications across various stakeholders in the industry, namely the mutual funds, the investors, and the overall stock markets. Let's see what the implication will be for the mutual funds. Mutual funds over the last few years have designed these multi-cap funds in such a way that most of the funds are heavily invested or heavily skewed towards large cap stocks. In many of the funds, the concentration of large cap stocks is upwards of 60 or 70% or even higher in some of the categories. So which means in the current scheme of things, many of the multi-cap funds are heavily invested in large cap stocks because of the market conditions. There is a lot of volatility in the markets, in the broader markets, number one. Number two, over the last few years, the small and mid cap space have not been attractive for investments in those segments because of various reasons, for valuations, for volatility, and scores of other reasons. So for those reasons, fund managers have taken conscious decisions of investing in large cap stocks over the last few years. So the implication on this will be huge because the funds have to exit some of the large cap stocks to buy fresh positions in small and mid cap stocks. So which means they have to first exit from the large cap stocks, or then deploy and find the right companies in the small and mid cap stocks, which both are challenging at this juncture because of the market conditions. Number one, the large cap stocks bring in a lot of stability in the current market volatility. And number two, fund managers will find it extremely difficult to get the right mix of small and mid cap stocks in the current market conditions. Of course, the mutual funds are planning to go back to SEBI for seeking of time, and plus giving few proposals to somehow get away from the new directive. The one option could be bringing in new category of funds called flexi cap funds. So what exactly will be the flexi cap fund? The name itself suggests it could be flexible across market capitalization. So that would actually fit into the current multi-cap funds, where multi-cap funds do not invest in any specific capitalization stocks in a proportion, but they invest in a flexible manner, taking the current market conditions into account. So that could be one option. The other option could be merging the existing funds into the existing large cap funds, and various other options which will be identified by the mutual funds to be proposed to SEBI in light of the recent directive from on the multi-cap funds. So on this directive, what could be the implications for the investors? The investors could actually consider this as a huge implication because of the fact that some of the investors, or large sections of the investors, may not want to take a huge exposure on small and mid cap stocks at this juncture, given the fact that the markets are not way too attractive in those segments. And that's the reason why most of the funds, multi-cap funds, have positioned themselves by investing heavily in the large cap stocks. So in case of funds deciding to progressively move into small and mid cap, that can add a lot of volatility in the portfolio, and that could also bring in the risk reward ratio on a higher parameter. So the investors should make a decision, consult their advisors, consult the mutual fund companies, find out what could be the alternatives. If they are not comfortable, the investors are not comfortable with moving into small and mid cap space, they could make their choices right away. So what could be the way forward? What is this implication for the stock markets? From the stock market perspective, the new directive actually could be a good news for the small and mid cap space, which is down and out in the doldrums for a longer time. Many of the investors have shunned small and mid cap space because of the past volatility, which had taken away a lot of money from the investors' portfolios. So in that context, the new directive from SEBI could actually revitalize the small and mid cap space. But how far will the mutual funds be comfortable to move into small and mid cap space at this juncture, given the fact that it can actually seriously create risk parameters for the investors' returns, and they may not be too comfortable to move at this juncture. So given this backdrop, SEBI's directive, though it's got some more time to be implemented in the current scheme of things, certainly the mutual funds will go back to SEBI and seek more clarity and give more proposals, to get away with the new directive in order to protect the investors' interest, as well as to overcome the market volatility in the current market conditions. Thanks for listening. Happy investing.